All right, guys, so the question is the yen going to continue to weaken? We're going to analyze CHFJPY, which is the Swiss franc versus the Japanese yen, and I'm going to answer that question for you. We're going to also look at the COT report. So for those who are new to what the COT report is or just unfamiliar, COT stands for the commitment of traders. Now, we know that the big banks, the institutions are actually moving the market. When we look at our chart, we see the candles move up and down. It is not us. It is actually the big banks putting in a lot of orders. So when we have the commitment of traders, we see the big banks and the institutions putting in their longs and their shorts. They submit that data to the United States government, and then they provide it to us as traders so that we know what they're putting in. It's called commitment of traders. So we're going to analyze that chart. I'm going to show you what I'm looking at. So that being said, let's go ahead and get right into it. All right, guys, so we are on CHFJPY. Now, I want you to look at this chart here. We're starting on the daily time frame because I always want to figure out what trend we're in. Are we in a downtrend or in an uptrend? Because it's a lot less riskier when you're trading with the trend than when you're counter trend trading. So that being said, as I scroll out, we can see that we were dominantly in an uptrend climbing up, and now we can see that it's consolidating. However, if we go to the lower time frame, let's say the 4-hour time frame, we can see that we have trends within this larger trend. And I'm going to show you what I mean by that. So as I scroll the chart over here, we can see price consolidating. And then we see price started to provide a downtrend. And then what I went ahead and did was trap this downtrend in a channel. It's respected a number of times. The Academy and myself, we got a lot of profits in this downtrend here. And then price came back up. And normally you would think that price would head down from this channel because it's respecting our downtrend and it's also respecting our horizontal resistance, but it broke to the upside, retesting this previous high. And now it's starting a downtrend again. So this is what I am predicting for price, okay? We always want to look left for price because this is considered price action. When we look left for price, we can almost identify where the big boys are going to be trading at the levels. Now, when I say big boys, I want you to think of COT report. I want you to think of the hedge funds, the banks, those who are moving the market. So you can see these red horizontal lines that I've drawn. This is the resistance line here at the top. This is my support line here at the bottom. So I'm interested in possibly buying here at the bottoms. And the reason why is because I see a lot of wick rejection. For example, right here, I see a couple of wicks right here. Over here, candles came and respected it. And so every time you see wick rejection or when price bounce off of support, it's going to go to the upside, right? I can continue to move over and we see a lot of wick rejection here. So that being said, let's go ahead and see what can happen. Now, one thing that I see here is a wick rejection here. All right. So as a swing trader, it may be a good idea to buy at this particular point, or even as a scalper, if you're only looking to get 10, 15, maybe 20 pips. Also, one thing we want to notice here is that we see this wick rejection. Now, if I bring the support up just a bit here, look at this here. Look at these wicks here. I'm going to bring this up just a bit. Now, look at this wick rejection here. Plenty of wick rejections here. So we see price still bouncing off here. Over here as well, over here as well. So this just may be the end of the downtrend before it continues to the upside. Now, if you're someone who like to manage risk really well, you probably will want to wait for price to come down here to see if it will retest this previous low here before buying. Now, if you're a swing trader like myself, I would probably put in a small lot size at entry right here. So that way if price comes down and tests this wick here, then I would be in the negative for the first position. I would put in a second entry here, another low lot size. So price rises, I would be in profit for this first entry here, continue to rise, then I would be in profit for the second entry here. And that will provide me with more profits when I have more entries. So why would I buy as opposed to selling in a downtrend? One, I marked my chart correctly. I've identified my support zone. So that's number one. You want to identify your support and resistance zone correctly. And we teach you that in the Academy. That can make all of the difference between sniper trades and someone's stop loss being hit. All right. Number two, let's measure where I may get in now to how far it can go when I retest this previous wick. And if we look here in this red rectangle here, it's about 40 pips. If you're willing to withstand 40, maybe 50 pips to the downside, then you're good. Swing traders are definitely good for that. I don't mind risking 40 to 50 pips if I know this is a strong reversal zone and price will continue higher and maybe get about 100 to 200 pips. Now, why would I buy? Let's go to the commitment of traders. So again, the commitment of traders are where the big boys, the big institutions are buying and selling. So I'm looking at the summary report for the non-commercial currency. And one thing I want to look at is for CHF and JPY. Let's look at the yen first here. So the yen is showing that they have a net negative of 9,810 short. So when you see this color red, that simply means that they're releasing longs or they're increasing their shorts. Either way, the yen is going to be weakening. This is a good thing. So you're probably saying, well, why would you buy? Well, because if I look at this chart here, the yen is the second currency of the chart. So that simply means because it's the second currency of this pair, when the yen is shorting, that means price should rise. Now, on the other hand, we have CHF as the first currency. And if CHF is strengthening, or if the Swiss franc is strengthening, that also means price will rise. So you want to see two things. You want to see the first currency strengthening, and you want to see the second currency weakening. That will give volatility to the upside. All right, so let's take a look back at the commitment of traders. Let's look for the Swiss franc. We have a positive 1,267. Now, that's not a lot. However, it's still positive. So I have a positive 1,267, meaning that the big banks, the institutions, are looking for more longs than short for the Swiss franc. Not that much, so it's low volatility. But when I compare it to the weakening yen, where they're exiting long positions and adding shorts, that will push that currency up higher, or that currency pair higher. Let's look at it a little bit more in detail. Here's the long change. All right, so when I look at this here, the banks and the institutions are actually exiting 7,667 long positions. So when you have long positions, let's say for example, for yourself, if you're buying positions, and let's say you exited a lot of them, as price goes up, as you exit, it starts to pull back. It's going the opposite way. All right. So now with the yen, since the yen is weak coming this way, or strong coming this way, when they exit, it's going to come back up this way. All right. On top of that, they added 2,143 short positions. So that also complements price headed up. So combining those two, I know that the yen is going to start to strengthen against the CHF, right? And it's going to start strengthening with other pairs that ends with JPY as well, as long as they have a green number here. So for example, Canadian dollar. If you trade the Canadian dollar versus the Japanese yen, this is a green number versus a red number. Because the green number is the first currency in the pair and the second number is red, that should move that currency pair to the upside. Now, if this is a little bit confusing, I have a detailed video I'm going to link right here above about the CLT report that it goes into detail how to understand these numbers. So that being said, I understand that this pair should be headed up. Now, we're just in a brief pullback, and I know that this area, this zone, should be the reaction area, okay? So it could be sometime this week, maybe on Thursday, or Friday, or maybe even the beginning of next week. But this zone is definitely key where we're looking to want to buy. Now, as I go to the lower time frame, let's go to the 1 hour time frame. Let's go ahead and fix my chart up a bit. Now let's go ahead and figure this out a little bit more here, okay? So we see a dominant candle here. Here's that wick rejection that we've seen on the 4 hour time frame, these last 4 hour candles here. And we see that currently on the hourly time frame, price is still pushing to the downside. So I may not want to buy now. I want to see if it's going to continue deeper in this zone here. And if so, I may be interested to buy deeper in the zone. Or if it still provides me with some bearish sentiment, then I'm going to be looking at this area here that we looked at before for another entry here. And that's only about 40 to 50 pips or so to the downside that I'm willing to risk because I understand the commitment of traders report. So guys, keep an eye out on this zone here to give you some numbers here because some of you guys may be watching this video late. Around 169.988 is where I'm willing to put my first entry. My second entry, I'm willing to put it around 169.752. You want to write those numbers down and just watch how price respects it. So traders, another thing you want to do is go to forexfactory.com or another site that provides you with economic news because the yen may have some big news coming out or the Swiss franc may have some big news coming out when price is in this zone right here. So you want to be careful with that because that can completely destroy my analysis. And that's why fundamentals pretty much rules because the big banks and institutions are also trading fundamentals. They're also looking at the news. You want to make sure that there's no high impact news for the Swiss franc or the Japanese yen when you're putting in this entry, unless it's something that is not that big of a deal, or if you're a swing trader and you know that maybe price may go up against you just a bit and continue to head up. But as of right now, the commitment of traders is in favor for Chef Yen headed up, and it's all about waiting for price to settle down into support before you make that buy. You always want to be patient with the trade, and you never want to rush it, and you always want to trade with the trend unless you're confident in understanding the COT report, or unless it's a B swing, a strategy. That's a strategy that we teach here as well. When price is at an all-time low within the last 6 months or more, and you're looking to trade that reversal and stay in that trade for a while. So guys, that's my analysis for Chef JPY. Let me know what you think about this. If you're against my trade, if you're for my trade, completely fine, because we're all traders, we're all speculating. We just have different strategies and different point of views, and I want you guys to let me know. Now, if you're new or a struggling trader, we have a Forex Academy that we invite you to. Everything is in the description below. We handhold you. We want to make sure that you're understanding and learning. We have a private community of like-minded traders, and we also have a signal service where we provide you with over 90% of a win rate. Currently, we're at 100% since our signal service started a couple weeks ago, and we're proud of that. So feel free to join us. Everything is in the description below. In the meantime, guys, thanks for watching, and I will see you in the next video. God bless you.